On to the action on Wall Street then, and stocks there slipped in fears that EU debt crisis may worsen as key indices edge lower from 5-year highs. Now the CPOE VIX, that gained about almost 9%, ending at a 9-day high. The August consumer confidence also hit a 7-month high in July. Home prices, they were up for a 6th month, but global concerns overshadowed the upbeat economic data. In fact, in closing bell, let's bring up the Dow, the Nasdaq as well as the S&P 500 index. The CBOE VIX as well was up by about 9%, and you had not the Asian markets, but the US equities will just come up for you on your screen.
We start with the Asian markets and a quick look at commodities along with some other basic risk indicators. Now, Asian markets are looking slightly soft. Asian markets clearly are consolidating. I guess the globally, most of the key economic indicators are now behind us, and since most of the fund managers clearly are of the view that in the near term we may not get a strong central bank action, because whatever ECB had to done, that is over, and from Fed an unlimited QE3 is already out. So in the near term the triggers are not there, and in the absence of triggers, maybe it will be extremely difficult for global markets to generate some upside momentum. Risk indicators, like I mentioned, they are not looking all that encouraging. Euro is at a fresh 2.5-week low against the dollar. If you check on global volatility, which is CBOE VIX, global CBOE VIX is still south of 20, but it has inched up. And if I look at SGX, it will just pop up on your screen. SGX also is consolidating. So I think globally things are not all that supportive. So once again, it is a situation of local versus global for our market.